Okay, everyone, welcome back to another weekly watch list video where we try to prepare by doing research and technical analysis on all the major indexes and those stocks that we're putting on our watch list for the week. And we do it all right here in this video. We start with the earnings for the week. So, earnings season is obviously dwindling down, but if you are interested, these are the stocks that have earnings this week. Let's go to the economic calendar. Also, super important when you're trading to know when these key economic data are going to start to come out, because they will affect the market. And what I'm noticing here is the CPI on Friday. This is going to be absolutely huge. And that's at 8:30 a.m. before the market opens. The Fed is going to want to see the CPI number coming down, okay? Obviously, this is an inflation data, and they have to start coming down drastically for the overall market to, get better. Because right now the equity market is super choppy. And that's what we're about to go into here. So I like to start with those two things, get those out of the way. And then I want to go right into our technical analysis on the SPY. All right. So this is what we're looking at. This is the trading year. All right. Very clearly, stepping down. Very clear pattern. And what I noticed here, and I posted this on my Twitter account. If you guys are interested in following that, that's at Mr. Greenbar on Twitter. Every time we consolidated, we pulled back. So after breaking out, there's a consolidation period, and then we made at least retested the lows and possibly making lower lows, which is what happened here. We break out to the upside, consolidate, and then break back down, break out, consolidate, break back down. We consolidated here, broke down, bounced here, and this is this past week. Consolidated. Now, will we break back down, which has been the pattern all year long. So for the whole 2022, we have seen this pattern of consolidating after breaking out, a nice little bounce, the consolidation, and then we break down to at least retest the lows and that staircasing down to eventually break the lows. So, coming into this week, I feel like this week is a very, very important week as far as, where we are going because of this previous consolidations. Are we going to extend the rally and break to the upside, or are we going to start to break to the downside? So super important week, and it comes on the inflation data on Friday. So those macro type of events, they can really move the market, at least for the short term. So be prepared for that. But this is what we're looking at right now. Consolidation after a really nice move, which is normal. But what we're going to want to see is definitely price holding up, but eventually making its way up, which it hasn't done all year. So this is super important week. Maybe we bounce around a little bit more before making the move either to the upside or what has happened all year back to the downside. So we're just going to have to wait that out. But that's the SPY. This is the compass. This is what we need to look at, even when we're trading stocks. Most stocks are going to look like this. Okay. So, you know, it follows the market. The whole market seems to work together. And, you know, a lot of stocks are coming into that area of the point of no return, I like to say. So right here, this is the QQQ. This is the past 3 years. You can see how high we have gotten. And now the bubble is bursting, and the same thing. Consolidation, breakdown, consolidation, breakdown, consolidation, breakdown. Same thing here. You know, consolidation, it's just not breaking and holding to the upside. So, you know, we still are over the 200 consolidate, the 20 EMA, you know, consolidating up here, but we just have to wait and see. And like I said, those inflation numbers are going to really affect the tech market, especially. But, you know, all these markets, they're all together. So that's the QQQ. And then going over looking at the Dow Jones. Last week, we had posted this also on Twitter. These white lines, this is 8% bounces, 8% bounce, 8% bounce. Each one of these bounces has failed, okay? Will this 8% bounce fail? I don't know, but the week was negative. Now, last week before that was very positive. We had a huge move. So, you know, the fact that we pulled back a little bit is totally normal. But will this be that 8% and then another pullback? We just have to wait and see. We're at a very critical area here on the technicals because we're going to want a nice week. So if we look at this on the SPY and pull up the weekly chart, I mean, you can see how far we've come since the bubble burst in 2000, 2001, the financial crisis, you know, to the dollar here, double top. And then the financial crisis pulled back. And then you can see how elevated and extended the market is from this 200 moving average on the weekly. Something that's been respected in the past. You know, coronavirus, obviously this one just, you know, broke through and then recovered pretty quickly. But you've seen support here. This is back when the Fed said they were going to raise rates. We pulled back 20% right to that 200. The only problem here is our 20% pullback is not even close to the 200 moving average where we were when we pulled back in 2018 right here. We pulled back, but we weren't that elevated. So we are extremely, extremely still bloated in this market. That's why I'm thinking that we are probably going to at least retest this 381 area again. But it is possible to come down and eventually, you know, touch this 200, which we have seen happen in the past. So we're just going to have to wait this one out. This was the weekly doji bar here, candlestick for the week. So, you know, it's holding up here after a big move. That's good. But this week, we're going to want to see at least a hold and, you know, maybe start to move from there. So that was the SPY, the Qs, and the Dow Jones. And now getting right into our watch list stocks. My first one is Starbucks. So I'm going to pull this one up on the daily chart. I like to look at these longer term charts instead of just, you know, those small compressed times to see the overall, the bigger picture for the stock. So what I'm noticing here on Starbucks, it has sold off dramatically from its highs. I mean, we've had highs here back, last year, 126. And it consolidated for the whole rest of the year before, 2022, just everything has come back down. The only thing about this one is the price to earnings is good. It's historically, it's in line. This is not an expensive stock here. And the CEO just poured in, I think, over $25 million to buy this stock. These are some things I'm looking at. Trend line for the year. So we have a touch here, a touch here, and a touch here. 3 touches on the trend line. That is a legitimate trend line. So what we're going to want to see is a break of that trend line. Not only did we see a break of the trend line, but on huge volume. See this volume bar right here for the day? Break of that trend line. That is a great sign. You also have a bit of a cup and now a handle forming. And this handle is forming just over the 50 moving average, but it is at resistance. So this week, I would be taking a long position if we could get over 79 and 80, and then eventually a move back up to previous consolidation areas around 95. This is what I would be looking for. The only thing is, and I'm going to show you because you all know I love looking back to see what can happen in the future. History does not have to repeat itself, but it often does. So the last time we had a movement like this, right, sort of like a cup, a handle right around the 50 moving average, what did we do? Instead of breaking to the upside, we failed. Now, we were also at this trend line. We were also already at this consolidation area here at around 93. And then we failed this, came back down. Now, same setup, consolidating. I mean, you got that little bit of a cup, you got the handle, right? So you have this sort of cup here, handle. The handle is at the 50. We closed at the 50 here and then had a huge gap down. We closed just above the 50 here. For me, this week and how this stock performs here after this nice, volume, and it is outperforming the overall market, which you like to see that bullish divergence. I think this one is going to break trend and break out. Okay. So I would be long Starbucks. Obviously, the overall market is going to play into this as well, but this one looks good. It looks like it wants to go up from here. I really like these volume bars on a breakout. That's really nice to see. So Starbucks, that's why that one's on my watch list. Next stock, Apple. This chart looks horrendous to me. The fact that we rejected so hard off of this 151, 150 area and had a just brutal day on Friday. Now with the overall market, but this was not a good day. It happened on higher volume than the day before when we had a nice green day. Also something you don't like to see. Everybody getting long here had to then get out. So that's not good. So what will we do from here, from 145? Possibly retest the lows. Okay, the lows here, I mean, you hit 132 when the overall market hit its lows, the SPY at 381. So will that happen again? Judging by the chart, it looks like that's a possibility. So Apple, I would be watching this one close, and this would be to take puts this week on Apple. Obviously, the overall market is also going to affect this. So keep that in mind. Next one on the watch list, Tesla has come back down to the 700 level. It looked great especially after breaking down below this area where we had two touches at this point. We broke down and then got right back up. That was very bullish, but ran into this trend line and now have come back down to the 700 on pretty high volume. So if this breaks again, this level, you have to assume that 620s will be retested. So keep this one on watch for a short here, or if we can break out along over this area. But, you know, right now I'm looking at Tesla to continue some weakness going into this week. And, you know, if these happen and Apple and Tesla start to pull back, that's going to affect the overall market that we saw consolidating because they have such a heavy weighting, and that's going to pull the overall market back down. So, you know, definitely these high multiple stocks trading at historical, crazy high price to earnings, they are getting hit the most. And then the last one on my watch list is something that we've been keeping a very close eye on because the biotech ETF has been sold off so dramatically. And if you look at this on the weekly chart, you can see here the COVID low had a very similar bounce right down here. And then we started to make a lot of progress. You can see these candlesticks here on the weekly. These are very bullish candlesticks. It's telling you something here. It's telling you that we want to hold up these levels. But looking at it on the daily, and this is what I would wait for, we need to see this 7150 break, which it has not been able to do. So this is resistance, resistance, resistance. Again on Friday, this stock on heavy volume, look at that, up 3.55%, totally outperformed the overall market, which I love to see that divergence. So if we can get this breakout, then I have a target here. Obviously, the first spot would be the 50 moving average at 78.56, and then, you know, up more so towards this area here. So between 96 and the 80s, that would be the next spot we would see after this consolidation. We would run right into that. So a lot of times when something breaks down and then eventually starts to climb back out, it's going to have trouble at previous overhead supply. That's just the way it always is. But this one's looking like it wants to break out. But it has looked like it wanted to break out before, pulled back, got right back up to that resistance, pulled back. Looks like it wants to break out here, pulls back, and then has two nice days here to end the week. Gotta wait for this to break first. Don't, you know, assume it's going to break because it hasn't here, here, and here. So wait for the break and then get long. So that's why XBI is on my watch list. So that's it. Just 4 things to watch this week. And the reason why is because the overall market is really just right now not sure either to the upside or the downside. So and we also have that inflation data on Friday. So we need to really, you know, keep an eye on this. But this is historically what has happened this past week. Past year, consolidation, breakdown, consolidation, breakdown, consolidation, breakdown. And that's off of these bounces. And like I showed you guys on the Dow Jones last week, the same thing happened. So we got that bounce, consolidation. The thing is, when you bounce so much so fast, you have to consolidate a little bit because you don't just go straight up forever. So the consolidation, I have no problem with after a nice move. But what we do from here is going to matter. And if we break the cycle, this cycle that has happened all year, then that's when we can start to say, okay, maybe the bottom was in on the market. I am just not sure of that at the moment. Without a retest of the spots that we were hitting, without a retest of the SPY hitting 380, I just don't know. It could be a temporary bottom. It's very difficult to call bottoms, obviously. So if you wanted to get invested in stocks, look for those cheap stocks. And there are so many of them. But they have to be making money. They have to have great balance sheets, a lot of cash, to weather the storm of inflation. So that's it, guys, for me. Quick weekly watch list video. Hope you guys enjoyed. Hit the thumbs up, and I will see you this week. Take care, guys.